Let me say something that might surprise you. You do not need to earn six figures a year to build a $100,000 net worth before 30. You don't need to start a unicorn startup. You don't need to go viral. What you need is a structured approach and time working in your favor. Most people hear $100 K and immediately think it's out of reach. But if you're in your early 20s, you have something more powerful than a high salary. You have runway. And runway plus smart decisions beats random hustle every single time. In this video, I'm not going to sell you a fantasy. I'm going to show you a realistic blueprint. We'll break down the math, the strategy, the psychology, and the exact moves that separate people who hit six-figure net worth early from those who stay financially stuck. By the end, you won't just feel motivated. You'll know exactly what to do next. Before we go any further, we need clarity, because most people confuse income with net worth, and that confusion keeps them broke. Net worth is simple. Assets minus liabilities. Assets are what you own that have value: cash, investments, property, businesses. Liabilities are what you owe: student loans, credit card balances, car loans, personal debt. So if you have $80,000 invested and $20,000 in savings, but you owe $30,000 in loans, your net worth is $70,000, not $100,000. This matters because you could be earning $70,000 a year and still have a negative net worth. On the flip side, someone earning $45,000 a year could quietly be building wealth if they manage their money correctly. Understanding this shifts your focus. Instead of chasing income alone, you start tracking your balance sheet. You stop asking, how much do I make, and start asking, how much do I actually own? That mindset change is where real wealth begins. Now let's calm things down with numbers. If you're 22 and want to hit $100,000 by 30, you have 8 years. Without investing, that's about $1,040 saved per month. Sounds heavy, right? But here's where investing changes everything. Historically, broad index funds tracking the market, like those inspired by principles in The Intelligent Investor, have returned around 8–10% annually over long periods. When you consistently invest monthly, compounding begins working for you. If you invested around $700, $800 per month at an average 8% return for 8 years, you'd be very close to $100 K. That's the power of time plus consistency. The goal isn't perfection, it's steady input. Money grows faster when it's moving than when it's sitting in a savings account. Once you see the numbers laid out, it becomes less intimidating and more strategic. This isn't magic. It's math. Here's a truth most people avoid. Saving alone won't get you there fast enough. If you're earning $500 a month, extreme budgeting won't magically create wealth. Your 20s are not for comfort. They are for expansion. Focus on income growth. Learn skills that pay well: sales, coding, digital marketing, video editing, freelancing, consulting. Job hop strategically every 2–3 years if necessary. Negotiate your salary, ask for performance-based raises, take calculated risks. Data consistently shows that switching jobs often leads to higher salary increases than staying loyal for too long. And here's the mindset shift. Your income is not fixed, it's saleable. Every skill you stack increases your earning potential. Instead of asking, how can I cut $50? Ask, how can I earn an extra $1,000? Income growth accelerates everything else in this plan. Now here's where people sabotage themselves. They get a raise. Then they upgrade their car, move to a bigger apartment, increase dining expenses. Suddenly they're earning more but saving the same. That's lifestyle inflation. Psychologically, this happens because of hedonic adaptation. We quickly adjust to better things and treat them as normal. Here's the rule. Every time your income increases, invest at least 50% of the raise automatically. If you go from earning $2,000 to $3,000 per month, don't live like someone who earns $3,000. Live like someone who earns $2,500 and invest the difference. This doesn't mean living miserably. It means being intentional. Wealth is built in the gap between what you earn and what you spend. Protect that gap aggressively. That gap is your freedom fund. You do not need to be a stock market genius. Most professionals fail to consistently beat simple, low-cost index funds. Companies like Vanguard built entire strategies around this idea. Instead of trying to time the market, use dollar-cost averaging. Invest a fixed amount every single month regardless of what the market is doing. Automation removes emotion. Emotion destroys returns. Set up automatic transfers. Treat investing like rent. It's not optional. It's scheduled. The earlier you start, the more time compounds your money. A 22-year-old investing consistently has a massive advantage over someone starting at 30. Investing isn't about excitement, it's about repetition. Small, boring deposits over time turn into large, impressive numbers. You can't build wealth while dragging financial chains. High-interest debt is the biggest destroyer. Credit cards often charge 20% or more annually. If your investments return 8%, but your debt costs 22%, you are losing. Car loans are another trap. Depreciating assets financed with interest compound in the wrong direction. Speculation is also dangerous. Chasing hype stocks, risky crypto plays, or get-rich-quick schemes can wipe out years of effort. Before investing aggressively, eliminate high-interest debt. That guaranteed 20% return from paying it off is more powerful than most investments. Wealth building is not only about what you do, it's about what you avoid. Protect your downside first, then grow. Relying on one income source is risky. One job loss can reset years of progress. Start small. Freelance a skill online. Sell digital products. Create content. Offer services locally. Platforms like YouTube and Shopify have allowed ordinary people to create scalable income streams. You don't need 5 businesses. You need one additional cash flow source. Even an extra $400, $500 per month invested consistently changes your trajectory dramatically. The key is leverage. Income not tied directly to hours worked scales better over time. In your 20s, experimentation is cheap. Try, fail, adjust. Multiple streams increase stability and speed up wealth accumulation. Time is the multiplier most people underestimate. A 23-year-old investing $500 monthly for 7 years has an advantage that someone starting at 35 cannot replicate easily, even if they invest double. Youth allows risk tolerance. You can recover from mistakes. You can take calculated career risks. You can relocate. You can learn faster. The earlier you build financial habits, the stronger they compound psychologically and financially. Starting before 30 is powerful because time works harder than effort alone. You are not behind. You are early if you move now. Let's simplify this into a practical roadmap. Years 1-2, focus aggressively on skill acquisition and income growth. Increase earnings, eliminate bad debt, start small investments. Years 3-5, invest heavily, target consistent monthly contributions. Build one additional income stream. Years 6-8, income should be higher now. Investments are compounding. Raises and side income accelerate progress. Track your net worth annually. Watching the number grow reinforces discipline. This isn't random hustling, it's staged progression. Each phase builds on the previous one. I don't earn enough. Then your priority is skill growth, not complaining. I'll start later. Later is expensive. Inflation reduces purchasing power every year. Waiting costs money. Investing is risky. Not investing is riskier long term. Cash loses value over time. Excuses protect comfort, not progress. Wealth requires action before confidence. Start imperfectly. Adjust later. Movement beats hesitation. Reaching $100,000 before 30 is not about being extraordinary. It's about being intentional. Increase income. Control expenses. Invest consistently. Avoid destructive debt. Build additional streams. That's it. Not hype. Not luck. Not secret formulas. Your future net worth is built by your present habits. Start this month, even if it's small, because the earlier you move, the faster momentum builds. And momentum is what turns ordinary earners into financially powerful individuals. Now, the real question is, will you execute? If you found this useful, hit subscribe for more videos on money, strategy, and smart growth. And start today, because small moves now create massive results later.